Hi everyone, welcome along. I'm My name is Karen. This is the first time buyer webinar. I work for ESPC and I'll be your host today. With us we have Ash, who's also from ESPC. She'll be giving us the property market update and general advice for first-time buyers if you're on the market right now. We've also got David Lodder, who is from ESPC Mortgages, and he will be answering all the mortgage-related questions. And we've got Aileen from Beveridge, Philip and Ross, who is our solicitor today and will be also on the Q&A panel. We've got really great questions through. Some of them are quite specific, some of them are quite similar, so we've bundled them together. So we'll do our best to answer all the pre-submitted questions, but if you feel there's something that you'd like us to go in more detail on or something that comes up on the course of the event that you'd like to ask, please just submit it in the Q&A box at the bottom and we'll do our best to get around to that at the end of the event. We also have a survey at the end of the event we'd really love for you to fill out just to give us some advice on how we can better these events and make them more appropriate in future. So without further ado, let's start with Ash.
Hi everyone, thanks so much Karen, that's great. Hopefully everyone's having a lovely morning so far. So welcome to the first time buyer event. I'm just going to talk you through some stats today. But yeah, first of all, I just want to say congratulations. It's such an exciting time to be looking for your first property. I know that it's very exciting, but can also be overwhelming as well. And we're basically here today to try and provide you with as much information as possible. And yeah, feel free to ask any kind of questions throughout. And I know that we will follow up with you with some stats afterwards. So if you don't get all of this down right now, don't worry, we can follow up with you as well. And yeah, I guess it's probably never too early in a time if you're looking for your first property to speak to a solicitor like Aileen, and also speak to a mortgage advisor like David, who can help you through the process as well. So first of all, I just thought I'd give you a little bit of background stats as to what's been happening in the market so far. So we're just going to focus on the last quarter, which covers from October to December as well. So and I think the guys will agree with me, usually historically this is a little bit of a quieter time of the year. So when we're looking back throughout October to December, we can still see some really, really strong buyer demand, but we have seen a little bit more of less stock coming onto the market. But this tends to typically pick up into springtime. So hopefully we'll see more properties coming on. So overall, the average selling price throughout all the properties over that last quarter that are registered with ESPC sit at £273,000. So, but what we're going to do today as first-time buyers, and if you're anything like me, it is also about looking at places that are affordable and thinking about different areas that you want to be in. So we're going to try and focus it a little bit more on different price ranges. So one of the first price ranges we're going to look at is LBTT bracket 0, which is from 0 to £145,000. And then we're also going to look at £145,000 up to that 250k marker. And yeah, just have a look at where properties are coming on, that there's really good volume. So there's a lot of properties and a lot of stock, and also for pricing as well. So the first one we'll have a little kind of talk through is that first band, which is 0 to £145,000. And this is across Edinburgh, the Lothians and Fife. And it is a range of properties. It kind of, is mostly flats within this price range, but it will include some houses as well for different areas. So the average selling price within this bracket is £116,000. Again, it just fluctuates from area to area and from property to property. But on average within that, buyers are paying 3.7% above home report value. So that's 3.7% above 100% of that home report value. The bracket saw a little bit of a sales drop between October and December compared to 2020, and we did see less properties coming to market than expected, but that kind of ties in with that seasonality, so that all kind of adds up there. Properties within this bracket over the last quarter are selling quite quickly, so we saw on average about 14 days until properties were going under offer, which is pretty quick. But when we have a look at the price ranges in different areas within here, we saw a high level of 2-bedroom flats that came on in places like Dunfermline. So you've got an average selling price there of £97,000 on average roughly, And also for a one bed, you were looking at £80,000 for that area. Again, it does fluctuate. This is just averages, and it does depend on the different properties that you're looking at. In Edinburgh, we saw that there was a popular flats. Gorgie is always quite a popular area for first-time buyers, and the average selling price for that one was £127,735. So again, there's lots of different areas that we can look at, but that was just two that kind of had lots of volume there and that were sitting at good prices as well. And we have another little look at the second band. So this is going from 145,000 up to 250,000. Again, it's mainly flats, but it does incorporate houses as well. We're seeing a similar story there. So there's a lower volume of properties than 2020, but there was still more properties that came on than 2019. And 2019 was probably more of a more normal year. I think last year was still, 2020 was still a bit of a crazy year with the pandemic. So the average price within this bracket was £193,162. But here we saw that the percentage of people, the buyers paying over home report value crept up a little bit over the last quarter, and that was sitting at 6%. And that was with 88% achieving home report value. Again, properties are always selling quickly. We're sitting at 16 days to under offer on average. So when that comes live to when an offer gets put in and is accepted. Again, 1 and 2 bed flats in Leith seem to be most popular. I think everyone loves Leith, don't they? Such a great place to be. So we saw 1 bed flats were sitting at an average of £171,000. And 2 bed flats were sitting on average about £212,000 as well. There's also 2 bed flats in Corstorphine that had an average selling price of £179,000. So I think when we have a look overall in terms of areas and what's coming on for first-time buyers, it looks like in terms of volume and pricing, definitely areas like Leith and Dunfermline seem to be really popular, also Gorgie as well. But yeah, they all kind of come up strong, but they do, I'm sure as Aileen will back me up here, they definitely just all vary from area to area and property to property. So it is always really, really good to speak to your solicitor just to get a bit of a feel for an area or have an area in mind that you might want to just do a bit more digging in terms of average prices and what to offer. Registers of Scotland say that the average first-time buyer price that was paid for property in Edinburgh was £254,449. So yeah, I think it would be a really good idea I could go on all day talking about all these different areas that you could look at, but I would definitely suggest speaking to your solicitor if you do have an area in mind. And we have lots of information on our website about all the different areas and advice for first-time buyers as well. But yeah, I would say definitely use the expertise of obviously your mortgage advisor and solicitor just to really get a feel for what you should be offering and kind of what's going around or what prices things are going for in certain areas. But yeah, and use things like at espc.com. We've got lots of different information on there. We've got first-time buyer guides that you can have a look at. And also we do have exclusive properties that come onto our website. So you can actually get in there first before it goes out to all the other property portals. So I would say get signed up for exclusive properties and also your property alerts on espc.com. But yeah, I think that's my recap of all the stats. I don't want to bang on, but thanks for listening, and I'll pass you back to Karen just now.
Thank you so much, Ash. So we'll move on to the Q&A. I saw that there's a little note in the Q&A box, but just a reminder, we'll get to all those questions at the end once we've covered the pre-submitted questions first. So David, the first question is for yourself. How does a fixed rate mortgage work?
Basically, it's practically what it says. It's a fixed rate that remains unchanged for a set period of time, which typically is 2, 3, 5 years. And what it means is you're on that rate, you've got a stable monthly repayment that you can budget for, and it gives you peace of mind during that period. Typically 3 to 4 months before it's due to expire, or after the 2, 3, 5 year period, you would then review your options again to see what would be the next best mortgage, because mortgages are typically done in tranches. If you want out of the mortgage, the fixed rate period, during the 2, 3, 5-year period, you can do it, but you will potentially incur early repayment charges if you want to pay the mortgage off in full, or equally you were selling the property. But that would be down to more specific advice of what would be the right thing to do. The length of the fixed rate to choose of 2, 3, 5 years, that again is down to specific advice and about what the client's life intentions are, and what period would marry up best to that intentions to give them that flexibility and avoid having any penalties, etc. But that's once you're further down the process, where the chosen advisor will ask you soft questions to get a better understanding.
Thank you. The next question is for Aileen. When is the best time of year to be searching for a new home?
Right, well, hi everybody. The best time to be searching for a new home. I suppose the slight the cynic in me says when you see a house you want to buy. It used to be when I was a young girl, that wasn't very long ago. Many years ago, it used to be you could say seasonally, oh, it's best to buy here, buy in the spring, do this, do this. Of course, since we've had something called COVID, it's just all been knocked in its head. But even notwithstanding that, seasonally, it doesn't really run in seasons. There are quieter periods, as Ashley said, there are quieter periods. And I think we could certainly see that the problem that I'm finding at the moment, which we generally do find in January, is there are a lot of people looking, but there's very little on the market. So I think we could say demand at the moment is certainly outstripping supply, which is why prices become inflated. So the best time to search for a property is, my best advice to first-time buyers is, once you know how much you can afford, and your first thing to do, I think, is to speak to David, the mortgage advisor, find it, because you must, it sounds fairly obvious. I mean, you wouldn't go into a shop and buy something if you didn't know you could afford it. So you don't go and start looking for houses if you can't afford them, if you don't know what you can afford. So you find out what you can afford and then just have a look and take it from there, because that's the best time to buy a house, to start searching, whenever you're personally ready to do it. So there's no strict answer, I wouldn't really have said.
Thank you. David, the next question's for yourself. At what stage after an offer is accepted is the deposit evidence checked?
Basically, the mortgage lender that you choose to submit the full mortgage application to, which is what you would do once you've got an offer accepted, has got the right to assess the deposit on full application. So this would be quite soon after you had a verbal offer accepted, and they have to get their comfort that they are happy with the validity of all the documents, which is sort of satisfying the money laundering requirements. Those have to also be satisfied by the solicitor, myself and the lender. So you sort of often got three parties that needs to be satisfied. Typical documents they're looking for is recent bank statements showing build-up of funds, and also if there's any gifts, there will be letters for the giftees to sign, along with potential evidence from where that money has originated. So it's just basically showing an evidence trail of how the money has been built up and where it is at present and why it's there at present. But yes, it's on application that these documents need to be presented.
Could I just jump in there, David, and say that, as you said, not only do you have to check it, but from a compliance point of view, the lawyers have to check it as well. And I can only speak for my own firm here, but we have an enormous amount of compliance to go through, probably more than you guys, David. Yeah. And we have got to send out all sorts of forms and get bank statements. And my own firm's policy is that if a deposit is under £15,000, we need 3 months bank statements. If it's over £15,000, we need 6 months bank statements. I don't know what other firms do, but that's my own firm policy. And people sometimes get a wee bit cheesed off with us and say, oh, I've provided that to the bank, I've provided it to the, but the time I'm finished with it, I can paper the walls with the stuff. So just be aware that there is duplication.
Yeah.
But we're not just doing it for the sake of it. We're doing it because we actually have different compliance regulations. So but you don't be scared about it. That's one thing. Don't be worried or scared about it.
Thank you. And another question for yourself, Aileen. How do you start a property search from scratch and proceed with purchasing your first home? Should first-time buyers be looking for a new build or something older?
Right, well, I think I sort of preempted my question earlier in saying how to start a property search. Well, the first thing you do is go and find out how much you can afford, and David and his guys will give you what's called, I call it a decision in principle. You probably call it a mortgage promise, or I don't know what you call it now.
Agreement in principle.
Agreement in principle. All right, am I very old-fashioned then that it's a decision in principle?
There's
Agreement,
different terminology,
yeah. Which, not to stand on David's toes at all, but it says, based on the information you've given us, this is how much you can borrow. You need to be very, very aware that the offers over price is really to reel you in. That's to get the interest. But the price that you are focusing on and the figure that you have to focus on is the valuation. Now, I must repeat that, and I repeat it. David repeats it and repeats it and repeats it to people because it is so utterly critical that, because you have got to say, valuation, and I hope I'm not coming onto any of your questions, David, but it's valuation. Your deposit is at valuation, and then over and above that is what you need to find as well. And David will come on to that in a moment. So the property search, you have got to decide how much you can afford, and then once you know how much you can afford, you need to look at the valuation of the property. That is so critical. I've said it twice here already, so I might get to 3 times by the time this is ending or more. But you look at the valuation. So if you go from the valuation, so it's offers over, if the valuation's 100 and you can afford 100,000, look at offers over 85, 90, because that gives you what I call the wriggle room. But you only get to 100. So if you need to get to pay over the valuation, if you start about the 85, 90, you've probably got enough for your deposit to get you to 100, and then you've got to pay over. And what most people struggle in the present market with, and always have struggled, but particularly in the present market, they are struggling with the money over the valuation, because just about everything I buy, and I've been doing this for a long, long time, goes for over the valuation. It is not like location, where, Phil and Kirsty sit there saying, hello, Jimmy, let's do a deal with a gin and tonic and what have you. It ain't like that, guys, okay? And they buy it for under the valuation. It very rarely goes for under the valuation. So that's the first part of that. And should we be looking for new build or older? That's entirely a personal preference, that one. Neither here nor there, it's just what you want. But a decent solicitor should be able to certainly look through as I say, I can only speak for myself, but I mean, I have a good quick squint at the home report, very good legal word, a quick squint at the home report if you're buying an older property, and I can very quickly say to you, watch that, or no, that's okay, or whatever. New builds are very attractive to people because you don't have this bidding process. The builder will say, that's the price we want. But remember, negotiate with the builder.
Brilliant, thank you. And I love that comparison there, Aileen. It's great. So David, the next question is for yourself. What is a fair percentage to have as offers over? And can this amount be part of the mortgage? And what price would be covered by a mortgage, the insurance cost or the market value?
So Aileen's alluded to it just now and sort of emphasised quite rightly the importance of this, but I'll re-emphasise. Firstly, what is a fair percentage to offers over? I would be a very rich man if I knew the answer to that question, and a very happy man. No property comes with the same set of circumstances. It depends on the level of interest, how long the property's been up for sale, etc. Based on historical information, I can only say the market was very vibrant last year. 10% overvaluation was regular, sometimes more, sometimes less. And activity early this year has been fairly vibrant as well. But in terms of what price would be covered by the mortgage, so just to reiterate Aileen's point, the mortgage is based on purchase price or home report valuation, whichever is the lower figure. And to give you a clear example of that, if the home report is £100,000 and you think you've got a 5% deposit, which would mean £5,000, but you actually had to bid £110,000 to get that house and beat the competition, your deposit will have to be £15,000 because you'd also need to cover the £10,000 over the home report, which will not be factored into the mortgage deposit for loan to value purposes. So I sympathise with first time buyers on this. It's a big challenge, particularly in Edinburgh, but any good mortgage advisor or solicitor, as Aileen's correctly highlighted, needs to hammer home that point, because as well as the 5% deposit, it's highly likely you will need additional ammunition to try and bid over the valuation. But when you see any houses and what to offer, having a good solicitor, they can give you some advice, because they'll have access to archived information to tell you how much houses have gone for. But please remember, you guys are the ones paying the premium, and you guys have to factor into your budget how much you can do as well.
Thank you. I've got another question for you, David. How does having children impact the mortgage application?
Well, I mean, I've got 2 kids myself, so I don't want to put you off having kids. But basically, yes, it can impact on your application, because in essence, if you've got 2 children, it's 2 extra mouths to feed. So if you have a client A and a client B who have identical circumstances in terms of income, debt commitments, responsibilities, you may find the client with no children may be able to borrow a little bit more, because they do treat children as a commitment. If you have childcare costs, nursery costs, school fees costs, which are fixed fees, that certainly will dilute your borrowing potential, because they are treated a bit like, rightly or wrongly, a bit like a loan commitment. So that would reduce your borrowing. However, if you are a high net worth client who is earning good income, sometimes the childcare costs can have, or having children can have little impact, because you feel like you've got a surplus of money month to month to take care of that. But no case is the same. It's based on affordability. Children are factored into affordability, but again, that's having a specific chat with a mortgage advisor to narrow down what is going to be your particular circumstances and options.
Thank you. Aileen, the next question is for you. Where are some advisable areas in Edinburgh to look for housing that are affordable and are up and coming?
I think if I knew that, I would be joining David and his and his very rich person. I think we'd be both jetting off to the Bahamas, not together, I hasten to add. I mean, it just make things very clear here.
Aileen, I'll go anybody to the Bahamas.
Yeah, but we're not taking your children, David. Right. Anywhere. All right. Again, that's just completely personal preference. Up and coming areas. You know, Edinburgh's a great city. I love living in Edinburgh. There are, you know, over the years, it's been said, for instance, Leith is up and coming. Leith has always been up and coming, but Leith has always been a great place to live. So I think it is just very much personal preference, jobs, where you are, etc., etc. I mean, I think it's probably well known and recognised that the further out from the city that you look, the cheaper the prices. and again, you've got to take into account, if you commute to, say, Glasgow or somewhere, then you'll want to move either side of the city, really. The south side, sort of Marchmont, Bruntsfield, Morningside, they do tend to be more expensive. But the answer to this question is there are no great up and coming areas. There are no areas really going down in Edinburgh, so it's personal choice.
Thank you. David, this question's for you. It's a bit more of a specific one, so feel free to generalise it. This listener in particular is looking for general advice for first-time buyers, and they have a combined salary of just over £50,000. So based on that salary, what is a likely mortgage rate they could afford?
So that's very specific, and it's not one size fits all. So I'll give you general advice. It's based on a number of things. It's based on, do they have any debt in the background? Do they have any children? And also for what rate, what size of deposit percentage do they have? Because that drives the interest rate. Rates are priced in 5% increments. You must have a 5% deposit and the rates will be priced at their highest. And then when it drops to 10, 15, 20, 25, as you go through those thresholds, the rate will gradually drop. And the reason for that is the lender thinks the risk basically drops as well. Somebody on 50,000, as a generalisation, they probably could be looking to borrow somewhere between 4 to 4.5 times their income. But there is a little bit more science to it than that. It's based on affordability. It's based on your particular circumstances and incomes. But that would be a general figure, and obviously would be subject to them having a sufficient level of deposit. But again, sort of that would be more having a good chat with a mortgage advisor, narrowing down your circumstances, and that will make the advice much more accurate.
Thank you. I've got another similarly specific question this time for you, Eileen. This listener has been searching and bidding for homes in East Lothian, and they have found that in general that they're going for about £10,000 over the asking price. So they're asking, how can they find a home that their mortgage and a few £1,000s over will cover?
Right. Well, I note that they said the asking price. Remember, I said that the asking price, the offers over, is to get the interest in. So if you're going for, typically when a property goes on the market, if again, we've got a lot of properties at 100,000 in this chart, but again, if we put it in, if it values at 100,000, you would put it on the market at offers over 95, because the seller is wanting to achieve 100 minimum, but wants more than that. So if the asking price is to, if the selling price, from, if that's how I understand the question, is it's £10,000 over the asking price, that's probably about right. Because if you look at that on my 100,000, the asking's offers over 95, so £10,000 over the 95, and I hope my arithmetic's right here, would be 105, which is 5,000 over the valuation. Now, if you're buying something at the moment at 5,000 over the valuation, you're doing pretty well, I think. The problem which first-time buyers have is, I've gone back to supply, demand outstripping supply. So then you get into a competitive situation. Now, we could have a whole seminar about fixed prices, closings, and all this sort of stuff, which I don't think is really the forum here. But if you are getting knocked out because it's going for 10,000 over the asking price, my recommendation is that you look at a lower offers over, because if you look at a lower offers over, you then again have this bigger scope to help you with your deposit, get to valuation. Here we go again, get to valuation, and then get over the valuation. So I think that's probably the best advice. Always remember that life's a compromise. And always remember that if you don't get house number one, and there's weeping and wailing and everybody's terribly upset and everything, house number two will be just the perfect house as well. So, and you just keep going and keep going. I have yet to find the person in all these years that I've practiced who never buys a house. Somebody, you always buy something. You might not buy the absolute forever house, but you might be on the step. That might be the interim step till you get to the forever house.
Yeah, I could not agree more. From personal circumstances, it feels like the end of the world when you kind of get that rejection, but it will work out. And like you say, a step is just amazing, and
well,
you'll get there in the end.
I say to my clients, we don't do weeping and wailing, okay? We're not doing weeping and wailing. We are not doing catastrophes, okay? Because, and I think also in the last 2 years, we all realise there are, you know, let's get this a wee bit into perspective. But it's, I've had it as well. It's so upsetting because you've got the ornaments round the house, you've got, you're moved in before you've got your lights, you've got everything, the whole thing's done, and then you don't get it. Yeah. It's life, isn't it, really?
It is. And it's nice to hear from yourself that it's more common than not. So you're not alone if it happens.
Oh, you're not alone. No, absolutely not. No. And you'll also only ever hear the horror stories. Nobody likes good news. Okay, you'll only ever hear the people who say, oh, I offered for 200 houses and I didn't get one. Well, I've never offered for 200 houses for one person in my life. You know, that's an exaggeration, but you'll hear, I offered for 20 houses and didn't get it. Well, I tell you, if you're offering for 20 houses, your advisor is not giving you the right advice, because if you get to about 4 or 5 and you're not getting them, I certainly say to my clients, you will have to lower your expectations because you're just getting blown away here. And it's not helping anybody here. But you'll only ever hear the bad stories. There are a lot of really good stories out there.
Thank you. And that's really great advice. David, the next question is for you. What percentage of a deposit is required for first-time buyers?
So probably quite similar to answer one of the previous answers I mentioned, but the minimum deposit you need is 5%. And please remember that is 5% against purchase price or valuation, whichever is the lower figure. So we can't use any money over the home report. Sorry, I'm sounding like a stuck record. That's the minimum. And the reason I say it's the minimum is that also comes with the strictest criteria, strictest credit score that you need to pass, the highest interest rates. So I'm not saying that first-time buyers won't be eligible, because many will, but I'm just saying that it's the toughest task to be available because the lenders deem it as the highest risk. The criteria and assessment will gradually get more favourable, as I say, as you go through the 5% increments, 10, 15, 20, and so will the terms and conditions that you will be offered for the mortgage in terms of interest rates. But yes, 5%, you got that deposit. I think you'll need more to bid over the valuation, but that is you in a place of potential eligibility.
Thank you. And this next question is the last of the pre-submitted questions. So if you feel that there's any last minute pieces of advice you'd like, just fire them into the Q&A box and we'll do our best to answer them before we finish up today. But Aileen, the next question is, if a person wants to buy on cash without a mortgage, do they get any advantages as a preferred buyer?
The answer is yes, they do, because any offer that is submitted is what's called subject to mortgage. So you put your offer in, again, we say we'll give you £100,000, provided our mortgage comes through. Now, the decision, did you call it a decision in principle, David? What did you call it?
Agreement in principle.
Agreement in principle, right, there you are. So you got along to your lawyer, you're holding your agreement in principle, and you're saying there's how much we can afford, so you make an offer. Now, when you're successful, if you're not a cash buyer, again, we don't have any fainting when you know, we phone and say, great news, you've got the house. Oh my goodness, I can't afford to pay for it. There is a process to go through until you pay for it. And the fact that that you are saying, provided my mortgage is okay, I will give you that money. If you're a cash buyer and you can say, I've got the cash, there it is, I can give you it now, that is very favourable to the seller. However, if it's in competition and there is a huge gap, the seller may say there's too big a gap between the person who has still to get their mortgage approved, although they've got the principal agreement, and the cash, so I'll still go with the mortgage one. But if it's close in competition, or if you are offering in a non-competitive situation, cash is king. always is.
Brilliant, thank you very much. So I'll go to our last minute questions that have came through. I'll start with the Q&A box and then I'll move over to the chat box. So the first one in the Q&A box, I believe it came in when Ash was doing her little bit. So I have advice for this, but if Ash wants to jump in, she's more than welcome to. So you know that Ash covered the two different price brackets, and this person is saying we're looking at properties between £250,000 and £300,000. Could we have a little more information about that? What I would say is we've got a lot of information on our website about house price reports that do cover the different price brackets and more general information. I don't know if you want to add anything, Ash.
Yeah, no, that's perfect, Karen. There's lots of information on the website that you can have a look into. Again, it depends which area, what kind of property you're looking for. But we have so much information. So if there is anything in particular that you're looking to find out about, please just drop us a message at the marketing inbox, which is marketing@espc.com. Equally, we can also speak to Aileen, who would be able to try and have a chat with you. If there's somewhere in particular, I'm sure she can talk you through it. So we've got lots of information between us, so just feel free to get in touch and we can have a chat with you as well.
I think also just to say as well, people have this misconception about lawyers that every time they speak to a lawyer, a meter starts running. Well, it doesn't with me, okay? I mean, there comes a point, obviously, where you're not going to start speaking to everybody all day and not make any money. So, as Ash says, happy just for people to get in touch and to run through things, because this is the biggest financial commitment you will ever make in your life. Mm-hmm. And you can't send it back like when you buy something off the internet and you don't like it. You can't, so you've got to be terribly careful and terribly clear on what you're doing. So I'm certainly happy to give any advice.
Thank you. I think the next question was on the back of one of David's points, so I'll read it out if you have any more advice to give. This person says, if I have some cash at home to put towards my deposit, around £5,000 or below, and put this into my account, will I still need to show where this money came from?
There are groans
to jump
in. So basically, the money needs to be integrated into the sort of financial services system, which would be obviously put in a bank account. Mortgage lenders do not like cash because that can be, without saying anything, could have been done from a number of sources and reasons, etc. The longer that money is integrated into the bank account and the longer it stays there, the better. But if it's a recent transaction, then yes, and I'm sure Aileen will back me up here, is that questions will be asked, and there will need to be satisfactory reasons. But I wouldn't recommend sticking 5,000 under your bed in cash.
No, I'm exact, David. Absolutely endorse that. My compliance team would have a stroke if they saw that, because we're not for a moment suggesting anything, but nobody, now the cash that we were talking about earlier in buying a house, we're assuming that is all been in your bank account, it's been inherited or whatever, but £5,000 from under the bed, I think you both saw I think everybody would have seen our sharp intake of breath at that. I wouldn't recommend it. I'm with David there.
All right. Thank you so much for the advice. I think we've pretty much already covered this one, but just in case you guys want to offer any more clarification, this person's asking, what percentage over the home report valuation should you offer to try and guarantee you will get it? I believe meaning the house that you're going for, which is a classic crystal ball question, but if you guys have any more advice.
Yeah, I think we've answered that, Karen.
We've answered that, yeah. And I think it also depends on competition. I mean, clearly, more competition, the higher you're going to have to bid. But your professionals can give you advice on that to say, if there's 20, let's put it this way, if there's 20 other people bidding on the house, I mean, my view always is I have no idea how much that house is going to go for. If there's 3 people, I can generally get a pretty good idea. So it is crystal ball gazing.
Brilliant, thank you. We're just moving on to the chat box now. I can only answer a few more questions because we are running out of time, but there is a question that says, if the deposit from an account is out with the UK, would you require 3 months or 6 months worth of statements for that money?
David?
I don't know, Aileen may have a different requirements, but I would probably be edging on the side of caution and wanting at least 6 months possibly to see the build-up of funds. I'd also want to see the wire transfer evidence to show where it's leaving. I'd want to see the debit leaving the bank account. I'd want to see the credit arriving in the UK. To keep it simple, it's basically an audit trail covering the whole journey.
Yeah, I'm the same. I'm the same, David. Sorry, am I echoing here?
No,
I'm okay. I'm all right. I'm the same, David, exactly. I would be doing that. And again, it's horses for courses. You need to see it. And then it's like, it is an audit trail and it's like building blocks. When you see it, you say, I need more than that. I need more than that. So I'm with you there, David.
Yeah.
Thank you. And this one's with regards to a lifetime ISA. Can this money go towards the deposit or can this actually go to any additional legal charge?
Will I take that? Lifetime ISAs, what happens is just as part of, I think as part of your deposit, you will close your ISA or lifetime ISA and see how much you want to take out, and then the solicitor has to claim it. It's the same with a Help to Buy ISA. The solicitor has to claim it, so it's to go towards your deposit. So the answer is yes, it's okay.
Yeah. The only thing I would say, and Aileen, I would ask me to correct me if I'm wrong here, is I don't think you get the bonus until you've evidenced you've bought the house. So
correct.
I don't, like, what I mean is I don't think the money can be, it's not liquidated to be part of the mortgage deposit tax. You do the transaction on the day of the purchase.
That's right. What you do is you close, once you've secured the property, you then close the ISA. Same with the lifetime ISA, it's the same thing really. And the closure form comes, or the request from Moneybox generally comes to the solicitor, and the solicitor gets the bonus. You get the full amount, but they get the bonus for the Help to Buy ISA, so you collect. And when you close it, the solicitor should be able to tell you when to close it.
Brilliant, thank you so much. And I believe that's all we've got time for. I know there was another few questions that came through. We're so sorry we've not managed to get round to them, but just to reiterate what the guys have said today, we are on hand to help. Please just send us an email and we can pass you to the right person. Feel free to email myself at marketing@espc.com and I can fire it off in the right direction for you. We would be really grateful if you could fill out the survey at the end of the webinar. It will pop up. It'll only take you max a minute, but it would be really helpful for our future events. Please do keep an eye for future events. We've got a buy to let one next Tuesday and more localized events in the coming months, but we will have more first time buyer events in the next couple of months as well. So just make sure you keep an eye on our website and on our social media channels. Of course, thank you so much for joining us today and providing us with really great questions. They are so much help to everyone listening as well. And of course, thank you to the panelists today. It was an absolute joy. This will be on YouTube at the end of the day today, so you can watch this again if you want to have a wee recap of what was said. So without further ado, thank you so much, guys, and hopefully see you next time. See ya.
Bye.
Thank you.
Bye everybody. Bye.
Bye.